Hey, welcome back to Weenie Trades. In this video, I'm going to be giving the Friday ETF rundown. SPY had a pretty big drop today, so I just want to give you some key levels and what I'm planning to do moving forward. So SPY had a pretty bearish day this Friday. A lot of liquidations into the long weekend. Hey, that makes a little bit of sense. So what I'm looking for over the weekend are the Sunday futures. And SPY is the ETF that tracks the S&P 500. You can do the SPX, which is the cash index, or you can do the futures /ES. And the reason I spend a lot of time with SPY is because I trade SPY. I use SPY as a hedge. Also, the numbers on SPY are not nice and easy to go through. I just like saying, SPY 440, SPY like bottom of demand zone is 438 versus saying like, /ES down at 4,400 or 4,408. It's a little bit more precise on the futures, and it's always good to be knowledgeable and check the futures, but I just prefer the SPY. So Sunday futures, if on Sunday the futures are kind of gapping up, I'm looking for resistance. So I'm looking for resistance to sell into, and that would be somewhere underneath 4,500 on the SPY, or on the ES, which on the SPY is about 4,500. See, like, can't do /SPY over here. SPY, SPY. If we get a bounce into Sunday, I'm gonna probably be looking to short SPY. Maybe I'll short SPY at about 448. Maybe I at least wait for a rejection of some sort. And the hourly time frame has been a little bit less choppy than the other smaller term time frames. But SPY, if we get that rally, I'm going to look to short it. If SPY is gapping down big, I'm going to be looking for dip buys. Or at least on the intraday time frame, maybe I'll be looking to short any little kickback rally. But SPY could get a little bit dicey, especially because selling can really snowball very quickly. And especially if everybody's used to just all-time highs. And the volume's light. Well, we did have a slight increase in volume today, and we have a big engulfing red candle. So SPY, top of the demand zone is 441. If we're gapping down on Monday and we're above 441, that could be a potential dip buy. And why 441? Well, it's the former breakout area. Breakout, jabbed it a little bit, broke out. Now we could sell off, extend it into support, generally leads to a little bit of a bounce. So keep an eye on 441. Otherwise, in an extreme case, dip buy probably 438. And again, these dip buys are not for just vertical all-time highs. These dip buys are for a little mini bounce to where you can get your stop loss in the green and then let the trend continue on upwards. So SPY on a gap up, looking to short, on a gap down, looking to buy. If it's right in between, I'll probably just look to short the intraday time frame. And I'll always be reevaluating at Weenie Trades Live. Next up, we got the QQQ or the NASDAQ. And of course, if you're looking for the NASDAQ futures, just type in /NQ. Sometimes it's a little bit cleaner, but on the futures, /NQ, 15,129. See, I don't like talking about the futures because it's a mouthful. I'd rather just say QQQ. The dip buy on the QQQ for me is 369. So if the Qs are selling off into 369, 370 on Monday, I think that's a phenomenal dip buy. I could do something like some options contracts on like Google off a dip buy at 2766. Or something like Microsoft. Microsoft has been relatively strong, even though it's down on the day. Still been relatively strong. Microsoft dipped by at 290, 291, something of the sort. Apple had a big unwind today on the Qs. So Apple, big reversal. That usually means we might go, first of all, Apple might go sideways for a bit to slightly lower. That was a pretty big reversal. Apple should have held in these upper ranges, or at least held 150 as a line in the sand. Today, Apple closed underneath 150, and that's a big jab. So got a decent breakout, got some good follow through, snap back in. And that's why we take profits through the breakout. So the snap back in, the last like 10%, barely takes a hit. So Apple, really interesting stuff. Netflix, probably gonna get clapped. NFLX, well, we'll see actually. Netflix, little bit of a doji day today, but still constructive. It's flagging at the highs. Okay, are we going to break out? It's tough to say. On Netflix, probably needs to come down into the 560s, especially on a market sell-off. It's tough to say, though. Netflix has been very strong. Bullish above 615, slightly bearish above 595 on Netflix. Amazon bearish. We talked about Amazon rolling over because we made a higher high and then snapped back in. That was yesterday. Today, we gapped up but sold off. So we had a little bit of follow through to the downside for Amazon. Look for Amazon to possibly roll over a little bit and probably come down to the 33.80 zone. So might be looking to potentially short Amazon next week. But Qs overall looking for a short-term dip buy. Otherwise, if we're moving higher, might be looking for a sell on the Qs. Next up, we got the XLF, the financial sector. And the financial sector, similar thing. We made a higher high, but not a lot of follow through. I'm trying to find the correlation between the XLF and the QQQ. So right now, the correlations are kind of synced up a little bit. Qs are a little bit stronger, but today they're a little bit weaker. But generally, if there's a crazy change in interest rates, you can check something like the TLT, which hasn't really moved quite a bit, or so you could check out the US 10-year note. Based off the interest rates, if the interest rates start to spike, the Qs are going to get clapped, the banks are probably going to rip, and I'm just looking for those correlations. So the banks, just kind of neutral for now. Nothing really interesting on the banks, but aware that they could rip if the interest rates rip. Otherwise, if the interest rates crash, XLF could absolutely get clapped. So XLF bullish above 38.20, that upper wick, and bearish on the XLF beneath 36. I know that's quite a ways away, but it's still potentially in an uptrend as long as we're holding above that 36. Get beneath 36 and we could zigzag on lower for the XLF. Lastly, we've got the VIX, the Volatility and Fear Index, and the VIX was up today. If you're watching the live streams, people were asking me about the VIX. When VIX was at about 18, I was like, well, VIX probably more likely to come up to this 2150 resistance. Again, charting out the VIX, it's a little bit weird and a little bit more difficult to do, but look at the VIX. High, lower high, lower high, lower high, lower high, lower high. We're getting a spike. Is this going to be a lower high, or is this higher low pivot kind of like a springboard to launch the VIX higher? Volatility and fear. Last week we talked about the VVIX, the volatility of the volatility index, and that just popped a little bit higher. So volatility is picking up. And there's a lot of derivatives in this market that can indicate what the market might be looking to do moving forward. So the VIX, beautiful breakout on the VIX today. Could use the VIX to hedge in this potential market sell-off. Remember, market sell-offs are really snowballing, and they can really unwind pretty quickly. So the VIX, looking for a potential hedge if the VIX is pulling on back into the 1950s. I do think that could be the dip buy on the VIX. And the VIX has options, at least on Thinkorswim. Otherwise, on Robinhood, you could go with a little bit weirder UVXY. UVXY, it's not my favorite. I prefer using the VIX or just bear call credit spreads or put spreads. If you don't know what any of those strategies are, be sure to comment below. Say, hey, what's this? It's good to learn and understand that when you understand options, you can profit off of any move in the market. Options are so artistic in that way, and that's why I truly love them. You can really express a trade idea with so many different risk scenarios and profit in many different ways, while somebody might have taken another trade and lost or made money. Whatever it may be, options are pretty awesome, and I can't wait for the VIX to be elevated, because when volatility is high, we get some really good action. We get some big moves in many directions, and it's a great way to drastically increase your P&L if you put in the work on trading over the years. Volatility being high, that's a trader's dream. So I can't wait for next week. I'll be shorting stocks, dip buying stocks, taking bigger positions on high conviction trades, having good stop losses, and if it goes south or against me, gonna learn from those lessons. But hopefully you guys enjoyed today's Friday ETF overview. Took no trades today on Friday, just slept in, and I feel nice and rested, and hopefully ready to tackle on this volatility next week. Alrighty, thanks for tuning in. See ya.